Hey guys, today I'm going to be explaining how I profited 10% from trading off of market sentiment alone in just the past week. This is my way of explaining to you guys my thought process of how to trade at a profit and do it in a very calculated risk type of way, because at the end of the day, when you trade like this, you are taking somewhat of a risk. I used margin, which I don't ever encourage anybody to use unless they're an experienced trader. But I used margin on this trade because I was so sure about how this would play out, and my conviction was just incredibly high. So, unless you are a very experienced trader out there, I don't advise you to use any type of leverage or go trade on margin unless you absolutely know what you're doing. However, you could have profited off of these trades that I made today without margin. I used margin because I was so sure and I wanted to make as much profit as possible off of this trade. The first thing that I want to say here is that Santiment is the platform, the aggregator that I'm currently using to aggregate data and put it on a chart that I can see and optimize for my specific likings. Right here, what I'm showing on this chart is the price of Bitcoin, the exchange inflow, how much Bitcoin is headed onto the exchanges, and the percent of stablecoin total supply held by whales with more than 5 million US dollars. So this shows whales and their current stablecoin holdings, and basically, the more they're currently holding in stablecoins, the less they have in Bitcoin on this chart. The more Bitcoin they own, the less stablecoins they'll be holding. So, with that being said, let's look at this chart. As you can see, this chart goes all the way back to 2020. And in March is whenever Bitcoin hit its low during this cycle, around $3,000, I believe. And at that time, the amount of whales that had over $5 million in stablecoins on their address was incredibly low, meaning that they were holding a ton of Bitcoin. And as the price started going up, what did they do? They started selling into stablecoins, and a lot of these whales timed the market incredibly well. At the top here, you can see that the amount of whales holding stablecoins begins to drop. So as the price starts going down on Bitcoin, the amount of whales holding stablecoins also begins to drop because they're accumulating Bitcoin. Let's zoom in a little bit further. Look at where it's at now. The amount of whales holding over 5 million in stablecoins is incredibly low, meaning that either A, they're getting out of the market entirely, or B, they're purchasing Bitcoin and accumulating Bitcoin at a very high rate. And as you can see, each time there is a huge exchange inflow, the price gets very volatile. And yet, within the past month, we've seen a lot of inflow on the exchanges, and yet the price hasn't really moved all that much. So, with other things going on in the background, like the CPI and the PPI data coming out yesterday and today, and knowing that the market is not in a good place worldwide, looking at the economy on a macroeconomic level, seeing that things are not getting any better at this point, I knew that the CPI data was going to be higher than what was expected. And that's exactly what we saw, 0.1% higher than what was expected of the CPI. And yesterday, it reaffirmed it whenever the PPI data came in higher than what was expected. So I knew that retail was going to be terrified today whenever they saw that data. The PPI data leads the CPI by a day, so it gives you 24 hours to really determine what the CPI data is going to look like. However, CPI kind of follows PPI in a 2-month rotation. It usually takes about 2 months for the CPI data to really catch up with the PPI data. And if you go back and look at the PPI data, then you'll see that it's been much higher than anticipated. It's been incredibly high. And what happens when producers have to pay more money to produce? You think that the producers, the corporations, are going to pay more for the products that they need to produce those products and not sell it at a higher margin? No, absolutely not. They're going to raise their prices as well, and consumers are going to have to pay those prices. And because of that, I knew that CPI data was going to come in high. So I timed the market, and last week I opened up a short position. And this morning, when the data came in and it was higher than it was supposed to be, I closed that short, and at the bottom of today's market, I opened up a long. Because I knew, again, that these whales have been keeping the price of Bitcoin pretty consistent between 19,000 and 21,000 for the past 4 months. As you can see on this chart, it reaffirms that they are in accumulation mode. These whales have less stable coins in their wallets, which means, again, that they either have more Bitcoin in their wallets or they've gone out of the market, which means that it gives more of an opportunity for retail investors. I've got to say that I am very impressed with the Santiment platform and the aggregation data that they are presenting to their users. You can actually go to the link in the description below and sign up for Santiment today and get started using some of this data. I highly encourage you to go and check it out. With that being said, it was incredibly easy using the fundamental analysis, the market data of all of these things to determine what was going to happen today. And so I wanted to share it with you guys so you can understand my reasoning on how I place these trades using both fundamental analysis and a little bit of technical. If you enjoyed today's video, then please be sure to hit that subscribe button. It really helps my channel grow, and I'm looking to make more daily crypto content like this. Thanks for watching, guys. Crypto Clay, out.